Welcome, everybody. We are here again for Ticker Talk, as we always are on Thursdays. So we're going to do Ticker Talk. We're going to take a look at some of the stocks that you guys are looking at. We'll look at the charts of those, but we are going to start. We're going to starting a new thing, or we're coming back to it, I guess. Really, doing a little quick little market update at the beginning. So let's get right into this. Everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All statements made are my own personal opinions and not to be considered advice to buy or sell any security. And all trading investment decisions are your own and done at your own risk. Okay, good. Got that out of the way. Let's get into it. I think everybody knows who I am. If you don't, pause this and check that out. I'm just going to go through and mute a couple people. Okay. All right, that's better. Okay, so before we get into this, just so everybody knows, feel free to ask questions anytime. Don't worry about interrupting me. If you want to talk, if you want to, unmute your mic and talk and have a conversation, that's awesome. We often get some really good conversations going here, so that's really cool. Feel free to do that, or if you're a little shy or whatever, or don't have a mic, feel free to type in the chat. I'll be keeping an eye on that, and we will definitely get to your questions. And I love having lots of questions. So let's get right into this and see what we got going on. We're going to start by looking at the market real quick, kind of what I do on the weekends, but hopefully go a lot faster. We'll look quickly at the major indices. We're going to look at, VIX and TNX and the dollar, and we'll look at sectors, and we'll see if there's any setups. So let's dig right into that. And as we always do, we will start with the SPY, the ETF that tracks the S&P 500. And as you can see, we are consolidating up here. Just above this this red line here is the 50% retracement of the all-time high down to the June low. And I remember from the last time we chatted, we talked about how this 50% retracement is important because no bear market has ever retraced 50% and then continued to be a bear market. It's always gone on from there to be a bull market. So that's pretty positive. At least that's positive, very positive for the SPY. The Qs, as we'll see in a sec, are not in the same situation yet. Now, one thing that concerns me here, and you can see this, and this is why, if you've been reading the morning briefings, you probably notice that I'm getting slightly more bearish as the week goes on. I'm also, to be really honest, been feeling a little out of sync with the market this week. I was really expecting more of a pullback. And this price action, this behavior, consolidation in here, very well behaved. And when we look intraday, and we probably should actually look intraday at this, if you look, I'll go 5 minutes on that. So if, you look here, we come down, we go up, we come down, we go up. It's every time it comes down, it's finding buyers, right? And, so this was today. And same goes for yesterday. We had gapped down, we came down a little bit, and then we found some buyers and we started going up, consolidated. We went up some more. Up in here, this is, where the, that should be 2 o'clock right about, or 2:30. No, 2 o'clock here. Yeah, this is the Fed minutes release, this big green candle. It goes up, it went up, it found sellers, and it came down, and it came down into the same area where it was just before those minutes were released, right? This is well-behaved price action. Oh yeah, we'll go back on that. So, yeah, I'm not sure why I'm getting a little more bearish. I think it's my gut, and some of the sentiment stuff that I'm hearing is making me a little bit more bearish on this market. Although I should say that I'm only short-term bearish. I think there's going to be a deeper pullback than just this consolidation. So you can see we've come up and we tagged that 200-day moving average, and we're in an area of fairly strong support. You can see that, strong resistance. You can see that, we've come up and tried to get through this a number of times before. We've got a number of times over here. We've got a few times over here. I really don't expect this to get through on the first try. However, that being said, this kind of consolidation here, right under resistance, everybody knows I love a little tight consolidation like that, because those are the ones that usually work really well when they break out. So there you have it. I'm kind of conflicted right now. I would not be one bit surprised to see a couple of big red candles and come down here into the 100-day moving average, somewhere in where this previous consolidation was, and probably not down near the bottom of it. I wouldn't at all be surprised to see that happen and freak people out. And then people will think, start talking about going all the way back down to, and making a new low and stuff. And that's right when the market will turn around and then go up and make new highs. That's kind of what I've been suspecting, but I think I'm wrong, because it's not happening. We also got to remember that this is we're getting into late August. Lots of summer vacations going on. Traders love taking this time of year off. You can see that the volume is starting to decline, and we're going to see the volume decline even more as we get deeper into August. And it's not until second week or so in September that the volume starts coming up, the market starts getting a lot more active, and we generally start getting some bigger moves again. So maybe it's just having seen this late August kind of doldrums so many times before. Maybe that's what's making me a little bearish and just sort of not wanting to be here. Not really wanting to trade much, not really wanting to be too committed to anything, because I've seen this with markets really slow like this before. All right, so that is the SPY. Let's look at the Qs. We're seeing much the same thing in the Qs. You can see we were watching this sort of cup and handle forming. The handle was only a couple of days long, and it's broken out of there. We had a nice little 2-day bull flag or whatever forming as the handle. Came up, consolidated again, broke out again. We've got another nice, beautiful little bull flag forming here. So no reason to expect that wouldn't break to the upside. We do have resistance overhead. You can see that 200-day moving average overhead, and the 50% retracement of the all-time high in the Qs down to our June low is just overhead. So, if we do break out, this is definitely an area we've got to watch out for. I'd be surprised if we got through there on the first try. So maybe we go over there and pull back, or maybe, maybe we do have a couple of red days and then we come down. I think in the Q, the Qs, it's really not far to this support here. They could even come all the way down to here. If they start selling Apple, for instance, and aggressively, we will come down to here, down to 300. But I don't think they're going to be selling Apple aggressively with their product launch thing coming up in about 2 or 3 weeks. IWM's looking nice. We were looking for, remember, we ages ago talked about this rounding bottom and how this might form a cup and handle. Well, it looks like it's actually forming the cup and handle even higher. So where I expected the rim of the cup to be at this resistance level here at around 192, it's looking like the rim of the cup is going to be just around 200, 201 in here. This little gap in the resistance level here. And it's forming a nice handle here. I mean, all of this is bullish. Technically, everything here is bullish. No reason to expect this shouldn't break to the upside. Except for, I just kind of think we're running out of buyers. So we, probably the healthiest thing to do is just to probably consolidate longer. Maybe, right to the end of the month. Maybe we spend the next 2-3 weeks just going sideways like this. It would frustrate everybody, but it'd be a really healthy thing to do. If we put in and this goes for all the indices, not just the Russell, but if we put in a consolidation that lasted, lasted about exactly that long, because if this is where it broke out, this would be the beginning of the second week of September. I think that would be extremely healthy, and if this happened, I would buy this breakout so heavily. I'd be going all in on that. So there you have it. That's our major indices. Let's take a look at the VIX. And you can see the VIX is, in a really nice downtrend channel. Every once in a while, it kind of pops up near the top of that channel and then falls off again. And now we're going sideways, and we're seeing more sideways. I think we've got more days of sideways in this than we have yet in this downtrend. And this might be one of the reasons I'm slightly bearish is that, it hasn't spiked up or anything, but it also just seems kind of stuck here. And, this probably does mean it continues downward, but I would like to see, volatility in the market is evaporating right now. But the volatility index is not declining anymore. So that's actually a bit of a divergence, right? When the volatility is tightening right up in the market, let's just take a look here. This is a reminder, where we are in volatility, right? Look at these tight little bars, we had tight little bars here. We had some, a few bigger bars as we came up, and we tightened right up again. These, very unlike these giant bars, a lot of these giant bars that we've had in the recent past, especially on the downside, right? So, and you can see here, this teal line here down it's on top of my volume chart, but this is the ATR percent for SPY. And if we look over here, we can see the number of that is 1.27. So the average daily range on SPY is now 1.27%. When we were up here, let's see that here. Yeah, this is over 2% up in this area here, right? So you can see our daily ranges have come down quite a bit. Volatility is tightened right up. And again, we're not totally seeing the same thing in VIX. VIX seems to have bottomed out here around 20. It would be nice to see that come down lower as we consolidate. Okay, let's move on to one of the other reasons that I'm ever so slightly bearish in the short term is the 10-year yield. And you can see that has been slowly grinding up for the last couple of weeks. We had a couple of big days of movement in there, and we're starting to get volatile. And then in the last week or so, the volatility is dragged right up there as well. Okay, and finally, we should look at the dollar index. I just need to bring this trader view over here. Right. So this is the dollar index, and we've talked about this before. When this is declining, that is typically good for equities. It's good for stop that. It's good for global economies. It's good for emerging markets. Strong dollar is not great for the global economy. It's great for the U.S. consumer because you can buy a lot more stuff with that dollar, right? But you can see the dollar index has been moving up quite sharply in the last week or so. And that's not something we want to see continue. If this continues, I think the market is definitely going to roll over. Now we should probably get a line across right there. We're going to come into some resistance here, these previous highs up in this area. You can see it was up again today, up a lot again today. So this is not ideal. And the market is going to start having trouble digesting this. Let's do one more little piece of macro here and take a look and see, because, we had those Fed minutes yesterday. And our probabilities. Now, this column here, that's a 50 basis point rate hike at the September 21st meeting. And here are the probabilities on the column on the right of 75 basis points. Now, yesterday, before the Fed meeting minutes were released, these were flipped. flipped on their head. And we had a 60% probability of having 75 basis points. So it's good to see this flip the other way. A flip like that, though, we would have expected to see. Markets looking a little stronger than they have been, right? This should have been accompanied by a fairly decent move in the market. So that's interesting. All right, let's move on to, I'm not sure if there's anything going on in gold or silver. Oops. Does anybody have any questions on that so far? Cool. All right, so we're looking at a chart of gold now. I think we talked about this is probably going to roll over. Maybe took a little bit longer than because it was a week and a half ago that I was saying if this probably rolls over. So it took a few days longer than I expected, but yeah, you can see the gold is rolling over. That would generally indicate lessening inflation fears, decreasing inflation fears. Silver, what do we got going on here? Yeah, that has rolled over as well. That had a nice bull flag going and tried to break out of there and didn't work. So that's rolled over. Copper has a big move. I think it was yesterday. Today. So yeah, I mean, copper had been making a nice move out of this bull flag. Went and hit its 50-day moving average and having trouble getting through there. And had a fairly strong day today. This is a bit of a catch-22 here because generally we want to see copper going up. When copper's rising, the price of copper increasing, that is generally good for the economy. It's a sign that the economy is doing well. But we're kind of in that funny place right now when we see signs the economy is doing well, that may not be good for the market because that's also signs of potential inflation and more rate hikes for longer out of the Fed, which is not great for our equities. General commodities index still going kind of sideways. Okay, but let's look at oil. Oil has, I think there's a chance that oil is bottomed here. I talked before about wanting to see some serious capitulation and maybe coming down and testing these lows. We might not get it, and I've kind of flipped my opinion on oil here. If we can get through this downtrend line and maybe this resistance up here at 95, I might start calling this the bottom in oil. But I'm not sure. That being said, I putting some money where my mouth is today. I entered a position in XOP, which is the ETF for the oil producers, because I think I'm nibbling right now. Because I've been waiting for a spot, and I think maybe this is the spot. But I still think there's a really good chance we see a fair bit more downside in here. But it's sort of all the fundamental macro stuff seems to be lining up for us to maybe getting ready to start moving up. I think it's early in the season yet. And this is maybe something I should talk about a lot more. I should maybe do an entire whole video on this. And sort of all the macro that's lining up to really shoot oil higher in the fall and through the winter. And what we might be seeing here is a little bit of front running. Okay, so that's crude oil itself. XLE is the energy ETF. So there's a lot of oil type companies here. And you can see this has been outperforming oil for a while now, right? And it appears to be breaking out. Well, it did break out. It broke out today. Again, this is another one of the reasons that I bought that ETF today, because of this breakout in XLE. Now, I'm not a big fan of XLE. I liked XOP because XOP has been outperforming oil. It's been outperforming XLE, and it's been outperforming OIH, the oil services ETF. So let's look at XOP, because this is the one I bought this morning. And you can see that it's broken out of a little consolidation here. Same sort of pattern that we're seeing in XLE. And it broke out of that consolidation, had a really nice day today. And so I'm glad I jumped in there first thing this morning. And then there's OIH, which is the Oil Services ETF. Now this one is not performing quite as well. It had a really good day. I mean, it gapped up and it went, but it still hasn't broken out yet. And you can see there's sort of a wider range in here. And so those are my reasons basically for choosing XOP. I also have a position in TAN, the solar ETF that I've had for a little while now. I'm in and out of TAN all the time. Actually, I like the space, and I especially like the space now. And alternatives are good to be in. It may seem counterintuitive, but when the price of oil is going up, generally the ETF is going up as well, right? This is the solar companies. So as oil becomes more expensive, solar power companies become more attractive. This was doing all right. But as long as oil is going up, this will probably grind its way up as well. So that's another thing to keep an eye on. Right now, I think these are kind of the best spaces. We can look at discretionaries have been doing all right. But they seem to be just like the SPY, hit the 200-day moving average and stall, right? So does it roll over? Or does it consolidate and go higher? I'm not sure. Industrials, let's look at these really quick. I don't think these were doing anything. Oh yeah, actually, these have been performing well. These are stair-stepping up. Got through their 200-day moving average, and now we're consolidating again. But given the previous consolidations, these nice bull flags, there is no reason to think this won't go for one last try, right? 1/3 breakout out of that bull flag. Given how much this is already up, I don't know. I mean, the risk reward on this not looking so great anymore. If we look at financials, the financials are looking pretty healthy. Same sort of thing, stair stepping up, consolidating again, and if we get a nice tight consolidation in here, buying the breakout out of that. For the move higher is kind of a no-brainer. Some of those financials, I think that a couple of the best setups I've seen today were financials. Goldman Sachs, nice tight little consolidation. I think we drew that in. Nice tight little consolidation. Bull flag right in here. That's a easy kind of no-brainer buy out of there. But one thing you have to remember about these financials, they don't move very quick. It's kind of hard to get rich on that. This is certainly no Best Buy kind of move, right? Not Best Buy, sorry, Bed Bath & Beyond kind of move. Morgan Stanley I liked better than Goldman. It just looks a little bit cleaner to me. That consolidation right there, it looks very traditional looking, very traditional looking bull flag right there. This one I might play because you measure the flag like this, and that gives us a nice move up into well over 100 into 105. So from we can get in there around 93 to 105 over the next 3 to 6 weeks. That's not a bad little play, and it should be reasonably safe, right? You'll be able to get in and out of that before the next earnings. Well, so we get technologies kind of meh. It is consolidating. It's nice and clean. It's right under that 200-day moving average, though. This is one that could break out and go. But the problem here is I think it's going to be held back a little bit by the communications sector. Which is just looking terrible. This is where Meta is, right? This is just ugly. So what else do we want to look at real quick? I won't do the FANGs today. We'll look at semiconductors because there was some stuff going in there. Cisco.
So jealous.
Cisco had their earnings today or this morning. And they beaten, or their sales numbers were excellent. Their guidance was great. So Cisco kind of is affecting this whole space. AMD is probably the best one that I found in here. I like this pennant in here, and it looks ready to go out of here. And this could be a really nice move for AMD. And AMD is one of those stocks, I think, that when it starts to go, I think it could keep going because I think that people are going to chase it. People are going to get FOMO out of this. I'm starting to feel a little FOMO not being in this, right? So I think that I think we could see some serious buying here if it starts to get some momentum. All right, what else do we have that I wanted to look at? Oh, healthcare. Healthcare is horrible. It doesn't look that bad here, but if we compare the healthcare sector to the S&P 500, look at this. So this is XLV divided by SPY. All right, so when this is going up, when this chart's going up, XLV is outperforming SPY. And when it's coming down, XLV healthcare is underperforming SPY. And look how steeply this is coming down. This is almost kind of scary in here. So yeah, healthcare is not a space I want to be in right now. Even the biotechs. So now we're looking at the biotech ETF. We're not dividing this by SPY or anything like that. But you can see, biotechs, which have been in a nice uptrend, have kind of, consolidated and broke to the downside. Now, nice little hammer in there today, right off the 20-day moving average, 21-day moving average, and an uptrend line. So maybe we're going to see some recovery in this. I don't know. I think we need to see more sideways action here. And I think people are going to be wary about getting in there right now. I think there's places that we'd rather be than biotech right now. And I was really liking biotech up until very recently, up until the last few days. All right. I think that is everything I wanted to show you and more. So let's just go back over here for a sec. So I am, unless anybody has any questions on any of the macro stuff or the sectors, index charts or anything we looked at, we'll move on to your tickers. And you guys know the deal. You can type them into the chat or you can unmute and talk to me about them. Just let me know what's up. What do you think about it? I see that Golf's phone has. I'm sorry, I can't remember who you are hiding behind Golf's phone. Has actually sent me a direct message asking if PLBY is a good play long term. So let's start with PLBY. So I think everybody knows that I have a position in PLBY. Obviously, I am quite disappointed with it. I really thought we would see great things out of this company, and it continually disappoints. So, we just have this massive downtrend. It had been doing so well, and now we've got this downtrend. It looked like maybe we were going to break out of it, but now we kind of got to put the downtrend right there, right? Let's get rid of that one, clean things up a little bit here. That used to be an all-time low. All right, so now what do we got left here? So, we're way under. Obviously the SPAC price of $10. We're about half of that, and continuing down. Even after the last earnings, which obviously disappointed, I was really hopeful on earnings day. When it gapped down a lot, went lower, and then went right back up. And then the following day, incredibly disappointing price action here because it tried to rally and it just couldn't. And look at that; it's just bleeding ever since then. So, while I like the company and I think they should be doing much better than this, maybe there's management issues here because they should have by now, I think, been able to get something going. There are people who know, people in the Discord who know PLBY inside and out a lot better than I do. And there's usually some good discussion in the Discord, in the PLBY channel of the Discord. So, that's a good place to look for some of the more fundamental information. but technically right now, this is ugly. There's no sign of bottoming in here. We had signs of bottoming in here before earnings. It kind of looked like we had a nice, nice consolidation. It was building a base. And now all we've got is we've got a big gap overhead, and we're bleeding down, and we've got an all-time low right here. Now, if it doesn't bounce off this all-time low, I mean, who knows where the bottom of this is, right? That right there should act as support. But I mean, it's just one data point. It's not, it's not strong by any stretch of the imagination. And if it breaks through, it could be a sudden move through there. So for now, I would say no. If you're not already in this and holding the bag, I would say no. This is not a good investment. And I'm sorry to everybody who's in it. I'm in it too, right? And I kind of wish I wasn't. But I'm holding the bag now. I've lost so much in this that it's not gonna make any difference to me now. It just goes to zero. It never was a big part of my portfolio. It was a small speculative position. Yeah, this needs to start proving itself. And we're going to look at this again over time, right? And when this starts proving itself, I'll let you know. But what it needs to do right now is it needs to go sideways some more. It would be really nice if this got up and closed this gap. Even if this got up and just, consolidated in this base. If we could take this base that it was in, so that base right there, and we can just extend that across, maybe, coming into the next earnings. Where's the next earnings? Right there, maybe we just, we get back into this base, we go sideways, and then before the next earnings, shortly before the next earnings, maybe we get a little break out of that as people get enthused about earnings. And then when the earnings come out, they're actually good this time. And we start, moving up. Then we can start trying to pick through all this overhead here. But for now, there's nothing on this chart that says this is a good time to buy this. No, it needs to prove itself. So that's all I got on Playbook. Does anybody else have any tickers they'd like to look at?
Hey, Kevin. Can you hear me? Yeah. Hey, so I was interested in Disney as a long-term sort of position.
Yeah.
And you talked about it recently, and it broke out of that level from the last ticker talk. Okay. And I was wondering, if I wanted to jump into it, what would you recommend? Or should I wait for a pullback? Because it seems to be going up pretty solid.
Well, yeah, I mean, this was that was a nice big gap up.
Yeah.
So let's get that gap drawn in there. All right, so we had the nice big gap up. That day, I'm not sure if that day there was something going on in the market. What day was that? August 11th? What day of the week was that? Sunday, say Wednesday? I think it was CPI day. Huh. Anyway, yeah, not great price action the way it gapped up and then it sort of pulled back down. But at least the next day then, you gapped up again, you had this nice tight inside day, and then it broke out of that. So yeah, we want to be seeing this zone hold. I would certainly think you would not want to see it come down below the low of, really we want to be above the low of this big green candle here, right? The second day, right? The one that actually broke out above the earnings day candle. You want to see the low of that day hold. So we're pulling back down to here. We're pulling into this big blue line. The 120 is former resistance from way back in the past, right? So it's not surprising to see that we're interacting with that level again. So it's been pulling back for 3 days. This is not a perfect bull flag, but we are definitely drawing a nice tight little bull flag in here. And these are great. These are great to play for breakouts. They usually work quite well. So you could draw a line, something like that, and just buy the next time it crosses that line. That'd be a way to get in. you could wait for it to come down to 120 and see how it reacts to 120, if it even gets that far, right? Remember, we're thinking about the low. We are thinking this low right here is important, and that's pretty much bang on 121, right? So you can.
And if you're going to play that as a bull flag too, Kevin, how would you measure like a breakout from there? Would it be like from the last candle before the gap, or?
Yeah, I would measure from down here, because we were already sort of starting to get a move down here, right? And that move is kind of mostly uninterrupted. And I mean, you got to remember that these measurements they're really kind of guidelines anyway.
Connection reestablished.
Okay.
So that, so yeah, I would draw it something like that, and then I just, whoops, I'll fix that in a sec. I just grab it, and from wherever it breaks out, right? Say it broke out tomorrow, and that takes us up into that 145 area, where we've got some resistance. So yeah, that seems like a pretty reasonable target to me, on a breakout out of this pattern. People are speaking more favorably of Disney right now, I think, than they have been in a while. They're being compared. Their pace of acquisition of like in their streaming service and Disney Plus. Is it Disney Plus? Or am I mixing them up with Apple Plus? No, I'm pretty sure it was Disney.
Yeah, I know they acquired ESPN and.
Yes, they've owned ESPN for a while.
Oh, okay.
Yeah, no, it's in the Disney. It's in the Disney streaming product, and their pace of acquisition of users has been like so much higher than Netflix. Although Netflix was the trailblazer, so I mean it shouldn't be too hard for them to beat it, but they've been doing really well there. I think that's making up for other things, and their parks as well. They have fewer customers in the parks, but their per customer spend is way higher than it has been in the past. So their actual parks revenue is up, even though fewer people are going to the parks. So that's good news as well. So it looks like they're turning a corner. They still may have some internal sort of management struggles going on, but I think they're getting past. They're getting past everything that caused all this downside, and recovering from it now. So I see no reason that this recovery shouldn't continue. So yeah, I mean, you are right to look for a place to get in. And I mean, for you, it's just kind of unfortunate that it gapped up so much, right?
Yeah.
This consolidation here wasn't ideal because it was very loose, right? Loose and messy in there. So that didn't really give you any good signals to get in there before the gap up, and going in before earnings is kind of scary anyway. So this is what you've got. And I think that whether you play the breakout of the flag, which means, drawing that line, that diagonal line, whether you wait, see if it comes down and bounces off of this area. So like one more kind of down day and then a bounce, right? Or maybe even like a capitulation, like a hammer candle, kind of like the one it drew today, but bigger, right? Like a something like where you would poke down through here, but then instantly go back up and close back up in here, right? So it tried to poke through support. They bought it hard and it went back up. And then the following day, you see a green day, on the next day, you got to start buying that at the open if it's going up, right? That would be another way to play it. And then finally, the last way to play it is to play the breakout from up here. But obviously, you're not getting as good a price. If you're more aggressive, buying the break of the bull flag if it goes up through here, like tomorrow or we're buying sort of something that looks like capitulation down here. You know, you're getting better confirmation if you wait for it to break above these two highs here, but you're paying a lot more. That all makes sense?
That makes sense. Yeah, thank you. Appreciate it.
You're welcome.
Yeah, I'll definitely keep that in mind. If I play it, I'll try and update you to see how I did. Let you know how I did.
Yeah, please do. Please do. Yeah, we can, you know, talk about it in the Discord, maybe in tickers you're watching or something like that, or wherever, you know, or you know, wait for one of the ticker talks, and we can talk about it then.
Sweet, sounds good.
Definitely.
Thanks, Kevin. I'm actually gonna head out. I caught you during a little break I had at work, so.
Oh, cool.
Yeah. Anyways, hope you guys have a good one.
Yeah. Thanks, man.
Bye.
All right. I'm going to, earlier today in the Discord was talking to Brownies about Celsius. He is, messy.
My favorite stock in the whole wide world. Not financial advice.
Nope. Wow. Just cleaning all this mess up. All right. Let's get rid of some of these lines too. So we can see there's been a few bull flags in here. Channels all over the place here. We had some targets that we had before. All right. That's better. Whew. Okay. So I think that Celsius is right up at all-time highs, right? Yes. Very near all-time highs. So that's obviously an important level that we got to get drawn in from here. Let's get that one in. It is right there. So yeah, I mean, pretty easy to see now that, I mean, we came up here, we gapped up on earnings, and we have stalled out underneath the all-time high. Not terribly surprising. I think anybody who's in this stock anyway should know the news of this with Pepsi and everything, and Pepsi essentially buying a piece of the company, and is also sort of a supplier. Now I want to get that gap in here, or what's left of this gap. The gap is partially filled, right? The gap, was originally farther up. The gap was up there. It's become now partially filled. So we'll just put it in like that. Because this gap is acting as support. Now, here's one thing. I mean, this is a bit of a warning here, just in case this happens. I'm not saying it's going to happen. I don't think it's going to happen. But if it did happen, it'd be pretty scary, because when something gaps up like this, and you get a somewhat tight, and this is tight compared to previous action, right? This consolidation right under resistance. There's always a chance that something happens, and then this gaps down. Now, if this gaps down and completely goes through this former gap area, we would have what we would call an island reversal. And this is a pattern that happens at the top of uptrends. And you can see that we've been in an intermediate term uptrend, right? This uptrend started in early May. Celsius bottomed out well before the market did. That's very healthy, right? But so we got this nice uptrend. If this gap down, it'd be an island reversal. Every technician will look at this and go, it's an island reversal. That is very, very bearish. That's the end of your uptrend. You're going into a downtrend. All right. So if you're in this and you see that happen, you should be quite concerned, especially if that happens and then this trend line breaks as well. I think you would see a lot of selling if that started to happen. So it might be the kind of thing where you would, if you hadn't taken some profits off the table, do so as quickly as possible, and then think about where you're going to get back in. Just wait and see what happens. But yeah, that's the sort of technical event that could happen here, that I would say shoot first and ask questions later. But I don't think it's gonna, because Celsius is a healthy company. What I think happens is we get more consolidation. or we just get kind of a bleed down, right? Now, this morning I talked to Brownies about, because he's talking about wanting to sell puts. Now he wants to sell the 65s or the 60s, which are way down here. I doubt he gets much for them, being way down here. But you know, I was saying, well, do you really want to sell them now, though? Implied volatility is really high, and the stock is really high. You want to sell puts after a pullback. You know, if we look back on this chart, you know, if we look at this consolidation here, then we have a breakdown, and then you have this pullback. Well, down in here is maybe where you want to start thinking about selling puts. And then once you see this and this reversal start to happen, if you had sold puts on this green day, I would have been, you know, congratulating you. Especially if you've done it early on that green day, that would have been a great place to sell puts. You know, conversely down here, we have the same sort of setup here, right? And you've got this nice reversal candle followed by a green day. This is when you want to sell puts, right? You want to sell puts on the right side of the V. Right here, all we have is a consolidation. There's nothing really here that says this is going higher. This says this is going sideways for a while. So not a great place. And you combine that with the really low implied volatility, puts are cheap. I'd rather be a buyer of puts, to be really honest, than a seller of puts. But what I did mention was, you know, if this pulled back, and we had a pullback to this trend line, or the 50-day moving average, and then it bounced, that's when I would seriously think about selling puts. And he, you know, I like the way he, you know, he looked at this, the 65 and the $60 puts. I think that is far enough away. Even if we come pull down to 75, I still think that the 65 is better, yet the 60s are far enough away. So bottom line is not ideal timing on selling puts here, and I think there's a fair bit more sideways in this. Now, if there's more news from Pepsi or whatever, then that may be the catalyst this needs to break out of this all-time high and then go much higher. So that's all I got on Celsius.
What about selling some covered calls, Kevin?
Sorry?
Selling calls?
So you would want to sell covered calls on this?
I'm asking. I'm not sure. I haven't. Every time I try to sell a covered call on something I'm holding, it goes the wrong way on me.
Yeah. And see, and that is, I think, the problem with selling covered calls on this. So again, the stock's going sideways right now, and there's nothing in here that says it won't continue to go sideways. So in a way that says, all right, you know, covered calls, not such a bad thing, right? But I would rather sell them when it's on its way down. So, you know, maybe this goes up for a couple more days, comes up here again and starts to roll over a little bit. Then maybe, you know, that might be a good time to sell it. But I think with what's going on with this stock and this deal with Pepsi, and I kind of feel like we could have surprise news out of Celsius at any time. And that could drive the stock price higher. So if you're in that kind of stock, you know, a stock where you're sort of a contradiction in terms, but in a stock where you're expecting a surprise, right? And the stock price might shoot up. Is that the kind of stock you want to be selling covered calls in? Or do you want to be selling covered calls in something that's a lot more stable, you know? Do you want to be selling covered calls in maybe Apple or something? Actually, no, probably don't want to be selling covered calls in Apple because it just goes up, right? But I think you know what I mean. You know, you don't want to be selling covered calls in a growth stock because there's a good chance that you're going to get whacked on those. Something's going to happen. Something's going to fundamentally change with that company. There's going to be some sort of catalyst, and it's going to take a sudden jump up and whack you out of your covered calls right when you don't want to be whacked out of them. That makes sense, Callie?
Yep. That's what happened at AMD earlier. Well, a few weeks ago.
Really? See, AMD.
Yeah, I sold covered calls and it kind of just ripped.
Right. Yeah. See, Yeah, I mean, well, talking about covered calls. Okay, so now we got AMD. We're in a downtrend. You'd think, okay, it should be pretty safe to sell covered calls, right? You draw this trend line, and it's sort of like, I mean, it's easy to say this in retrospect. Hindsight is 2020, but there's been a couple opportunities. Any of these opportunities, I mean, you would have had this trend line drawn in, maybe not exactly the same way I did, but when you went up to that trend line again, and then you had a big red bar, that's a place you could think about, selling your covered calls. Well, it comes down, starts to roll up again. We come up to the trend line, we consolidate, and then we start pulling away to the downside from that trend line. Sell the covered calls here. We came up, came up to the trend line. Once we can touch that trend line, right, it just went right through it. So you don't want to be selling the covered calls in here. Maybe sell them here, coming into resistance. I could see, some reasoning for that, especially on the backside of that. But it didn't go down very far, right? However, I think that by this time, all in here, even though it looked like it tried to go up, it was kind of more sideways. This one here looked like it had put in a bottom. A nice move up, little pullback, small pullback, big leg up, small pullback, big leg up. So this is now definitely in an uptrend. And this is the kind of thing where we expect, we expect this to break out from to the upside here. So, kind of not the kind of stock you want to be selling covered calls in right now. I bet you that selling puts right here would have been really lucrative. Selling puts here would have been pretty lucrative, although certainly a lot more risky and uncomfortable. Now the risk reward on selling the puts is probably gone, and I bet you IV has dropped right off here as well. So it's so tricky, getting the timing on these things, but picking the right stocks to do it in, and I would argue, I mean, AMD is usually a reasonably stable stock. If you get your timing right in AMD, you should be able to make money either selling puts or calls. But sometimes sometimes it just doesn't work out. Sometimes it makes a move that's unexpected. Okay. Anything else you guys want to look at?
I have AAPL and ERX.
Okay. So Apple, all we have to say about Apple is it just goes up, right? This is just a beautiful uptrend here. Since the June lows, I mean, actually, I think this bottomed out the day before, a couple days, because I thought the market bottomed out on was it the 19th or the 21st? Oh, it's okay. Market bottomed out on the 17th. Apple bottomed out, I think, the day before. Yeah, on the 16th. Apple bottomed on the 16th. Apple may have led the way into this rally. This rally for Apple, at least, is, continuing quite strongly. I mean, look how close we're only $8 away from all-time highs, or $7 away from all-time highs. It's amazing. No sign of this slowing. But it's so steep. I think that I just can't see it blasting through this all-time high on the first try. It's got to go look like it's putting a double top in there or something. But I don't know if you heard today, Callie, but they have announced the date for their fall product release. And that was, I believe it was September 7th. So that's only, 3 weeks away. So there's going to be, I think there's going to be more upside in this. No reason for this trend to slow down. While people are anticipating all these new products. People really want to buy it up ahead of that. Now that event might be a sell the news, and that might time out. It might just time out so that by the time the stock price gets up here to 183 to this all-time high, that might be September 7th or so. Where's September 7th? Yeah. So September 7th would be right where I got that cursor. you know, that seems to me a perfectly reasonable pace for this to continue up there. So yeah, I'd watch out for sell the news on that September 7th product release. But for the next couple of weeks, no reason to think this doesn't go higher. I see that Sarma has asked for GRNWF. That sounds like a pot stock. Oh, Green Lane Renewables. Okay. So it says coal and consumables, but coal's not really renewable. Sir, do you know what this company does? What is the renewable that they apparently do? Because I doubt that it's coal. Might be uranium. But it is actually. All right, so they just had earnings a few days ago, so they ran up into earnings. I just want to compare this to the uranium chart. It's a clean energy stock. Yeah, like, so, you know, solar or do you know what kind of clean energy? If you don't, that's fine. That's totally cool. It is a penny stock though. So, and it's been in a downtrend. There's a whole lot of volume. It's hard to do TA on the stocks that are like this gappy. It also, well, it's not an ADR, so it may not be foreign. Yeah, tough. You know, because obviously we can see the downtrend. This is, you know, very long-term downtrend. Did it really IPO at like around $1? Yeah, just I don't know what to say about this, other than it has recently had a nice strong move above the 21-day moving average and above the 50-day moving average. This is as far above, or, you know, on this move right here, that's as far above the 50-day moving average as it's been since like November of last year. So that's somewhat bullish. That you know, that does indicate potential bottom. If we look at the RSI down in the bottom here, we can see that we made this low right here in price, okay? And there's the low in the RSI, and that low in the RSI is actually higher. So we've got a little bit of divergence in the RSI. That's bullish as well. But I'm reluctant to trust a lot of this TA on a stock that's so thin and so gappy. You've basically given me a difficult one. I will say that I think it's really important. You know, we've had a nice leg up here. We've now had a pullback. This really needs to go like right now. We do not want to see this break the 21-day moving average or the 50-day moving average. We want to see this continue higher from here. And if it does that, if it does continue higher from here, we also want to see it make a higher high. If it does that, you'll also have, for the first time in, I guess, since last November, you will have a bottom, a low, a high, higher low, and then a higher high. That would definitely be the beginning of an uptrend. But right now it's a little early to call the beginning of the uptrend, although we are definitely getting clues that there's a bottom in this stock. And we talked about, I'm not sure if you were here earlier or not, when we were talking about, when I was talking about oil and TAN, that solar ETF, and how well the solar stocks, you know, have been doing and will probably continue to do as the price of oil continues to rise. And we are definitely expecting oil and energy in general, natural gas, any kind of energy, to increase in price as we get into the fall and winter. I think that we will see very high energy prices. So, yeah, this may recover here soon. All right, anybody else got anything they'd like to see?
ERX.
Oh, ERX, right. Sorry, you mentioned that earlier. All right. Is that right, Kelly?
Yep, that's right. That's the two
So
times. We spoke about this before, remember? I took a big loss on it.
Okay.
I'm in contracts. Well, yeah, I'm in contracts again.
So this is the 2 times energy bull. So it's
Yeah.
like XLE times 2.
Yep.
Okay, gotcha. Okay, so you were here when I was talking about energy earlier, right? Or were you? Yeah, you were here.
Yeah, I think I was. I was just a little busy with work. Did you mention it? I'm sorry, I didn't.
Yeah, I was talking about XLE. I won't go through it all again, but maybe go back. I bookmarked the videos, right? So maybe go back and watch what I had to say about XLE, oil, XOP, OIH, how I'm becoming more bullish, because I was like short-term bearish for a while, right? I'm very long-term bullish on energy, but I have been short-term bearish. I thought we'd be going down a lot lower than we have, but you can see an XLE here today, right? We have that high, we pulled back, we got the higher low, and now we have the higher high that confirms the higher low in XLE. Now we're not seeing exactly totally the same price action in ERX, but it's pretty close. And ERX is a derivative, so. Actually, I guess we do have, very similar kind of breakout happen today. Not quite as perfect or obvious, but we did break out above, above a resistance level that has held for a while. And we broke out above that in ERX as well. And we can see it's also breaking out above the 100-day moving average. So this looks poised to go higher. Just looking at oil after hours here.
Yeah, I have some 55 calls for September 16th.
Cool. So you still got time. Lots of time.
Yeah. Yeah.
Good. Because they're back in the money now, right?
Yeah, they actually went up today. I bought them, I think, at 450, and they closed at 5. So that wasn't bad. Okay. Oh no, I'm sorry. I bought them at 480, and they closed at 5.
Cool. Yeah, I think it's going higher, and like I said earlier, I nibbled on XOP today, because I had liquidated a bunch of my energy holdings. I had a lot of energy holdings through most of this run up, and I had liquidated them. I had started liquidating them, as we were. Well, if we go to XLE. I had been liquidating, I had liquidated some in here and some there, and then I was also liquidating on the backside a bit until I think in around here had nothing left, except one Canadian oil company, oil and gas company, and that was it for my energy. And now I'm starting to nibble again. Like I said earlier, I could be wrong, but it sure feels like we're going higher and sooner than I thought. And I guess we won't get the capitulation that I thought we were going to get. So yeah, nice play. I think your timing is pretty good. I think that you're seeing the proof, right? I was seeing the proof today, and that's why I started nibbling. And if we're seeing the proof, if this is the proof that you and I needed to get in, NS in the Discord was seeing the proof about 2 weeks ago, and I think he was a little bit early, and I hope he didn't get spanked on that. But hopefully he managed to stay in, because yeah, I think it's starting to go, and I think this is the time now to start accumulating, but slowly, because I still think there's a good chance that this rolls over. So that's what I got on your energy for you. And like I said, maybe watch the recording, because I went into more detail on it a little earlier in the session. All right.
Hey Kevin, I had something for you. Can you hear me?
Yeah. Oh, you're here.
Yeah, yeah, I did manage to kind of jump in on this one as well. So yeah, I think mine was more of yeah. I'm also seeing bullishness in oil, and I did I did stay in
Okay.
and managed to get some additional today as well. But yeah, I'm an XLE. I actually didn't think about XOP. Maybe I'll pick some of that as well. But yeah, I think I had a general question. So when you're trying to kind of average into a stock, or like let's say you're holding a position and trying to average in, would you first would you look at like a top down approach, like you would look at the sector first to see if it's showing any signs of bullishness, and only then average into a stock, even if the stock itself, let's say, looks bullish in terms of a setup? Is that a right assumption?
Yes. Hey, Ken. Thanks, man. We'll see you next time. Yeah, typically I want the sector to be working, and I want the stock to be working, and I want the stock to be outperforming the sector. Now, a lot of stocks, it happens all the time where a sector might suck for whatever reason, but there is a stock in there that's got its own catalysts that are so powerful that outweighs just how badly the sector itself is doing. But in a perfect world, you've got everything aligned, right? It's all working in your favor the same way. now. And the energy play here is a good play. So when I'm looking at energy, and you'll see this from I can't remember if you were here at the beginning when we were looking at oil. I start by I start by looking at oil. So when I look at oil, I go, okay, oil is weak. Oil is coming down. But in the last couple of days, we've got some strength in oil, and this last leg down in oil is smaller than some of these previous legs. Maybe this is sort of bullish, for oil, even though I was expecting some big capitulation. Okay, so there's my big picture. So the big picture is really oil. If we're going to look at anything to do with that sector, we're going to look at XLE or XOP or anything like that. It's really all about crude oil, right? Okay, so there's our big picture. Then we move over to XLE. And this is the energy sector, right? This is where the stocks of the energy companies are. And we look at this and we see a different story. We go, oh, this is interesting. Oil was just going down, but this has been going up, for the last month. Why are the oil companies, why are the energy companies going up when the price of oil is going down? That doesn't really make sense. So then you want to try and figure that out. Now, there are some solars and alternative energies and whatnot in this. And, you've got that infrastructure bill that just passed, that's got incentives for alternative energy. And so that's going to be a little part of this. But that doesn't tell us the whole story, because when we go and look at just the oil producers, right, we see the same kind of thing. These stocks have been going up. So now we've got the big overall sector. We've got the big overall sector has been going up, and then we've got a subsector that's also going up. Okay, and this one's XOP, and this is the one I bought today. And then we can start looking at some of the companies in there. Oxy, right? The one that Buffett's been buying a ton of. Now this hasn't been going up as much. It's actually been kind of weak compared to that ETF. Oxy's a little weak in my opinion. We could look at Chevron, GDX, I think. Yeah. Has been going up, but over the last couple of weeks, kind of a little bit of a sideways, a little bit of consolidation. This to me could represent a bit of an opportunity if you wanted to get into an individual stock in here purely on the technicals. I know nothing about the fundamentals of this company, but given what its sector is doing, given what a subsector is doing, looking at this pattern, looking at this little pennant here, I think it's totally reasonable to expect a break to the upside, and at least, at the very least, a run into the all-time highs here at 180. So from 160 to 180, nice little swing trade there, right? So that's maybe something you could do, or you can, you can drill down farther, right? Maybe what we want to do. So when we look at this space, because what we've done here is we've found a subsector in this space that's outperforming the others. And I should show you another way that we do this. Okay, I've gone through these before. We did a whole session on these relative strength charts. But what we're looking here is, so I've got two charts of stocks themselves. And then on the very bottom, I have a comparison of the two. Okay, so up at the top, I've got XLE. And then in the middle one, I've got XOP. And what I'm going to do down at the bottom is I'm going to divide XLE by XOP. And it shows us this. Now, if XLE was outperforming XOP, this chart would be going up, not down. All right, so this is saying, hey, XOP is outperforming. You know what? Let me draw this the way it makes sense. So you don't have to do that mental gymnastics. So we're comparing XLE, or we're comparing now XOP to XLE. And so look how much stronger XOP is than XLE.
So this is just the RSI, dividing the RSI.
No, this is not RSI at all.
Okay.
I'm dividing one stock by the other.
Oh, okay.
Okay, so I take XOP and I divide that by XLE. So if our numerator, forgotten my grade 8 math, XOP is a numerator, right? So if that is going up, it's outperforming the denominator, outperforming XLE in this case. Okay, so I'm the kind of guy that I like to chase strength. So that sort of leads me to want to be in XOP. Now, this is something I did earlier today, and I did it with all the subsectors, and I did it with a couple of companies as well. And I started out by dividing crude oil by XLE. Even though on the chart I could see that XLE was stronger than crude oil, right? And then it's like, all right, let's look at some subsectors. And we got XOP, we got OIH, the services, oil services, right? And then you could do individual companies here. And what we want to do, what we can do this way is we can drill down, and we've now found the best subsector ETF in energy. Although actually we haven't looked at TAM. So why don't we compare XOP to TAN and see how that looks, because we know that TAN has been doing really well lately. And we can see now that XOP had been underperforming TAN, the solar ETF, for a month and a half, 2 months, right? But in the last week or two, we can see that XOP is starting now to outperform TAN. So we're really on the right track here with XOP. So what we really should do next is start drilling down in that ETF. So you can go. I'm sure you know where you can go, and you can find the components of that ETF and just start banging up charts of them. So I know that some of the let's go back to our daily chart. Some of the stocks in there will be like, in some of the smaller ones, be like Devon Energy, and you can see here if you highlighter. If you look right up here at the top of all my charts, you can see the sector, energy, and then I've also got the subsector, oil and gas production. Okay, that's XOP. So we can see that's in here. Now remember when we looked at Oxy and Chevron, they were weaker than this, weren't they? We can see that Devon, one of the smaller companies, nice little consolidation here and nice breakout from that. So, maybe this is a company, would be a good company to play in this space. Maybe we'll probably get more juice out of this than we would out of the ETF. Marathon.
Is HAL one of them? HAL is an oil producer. I don't know. I'll have to check. I think HAL, Halliburton.
I'm not getting that word.
I'm going to type it in maybe.
Oh, okay. Yeah, there's a bit of an echo, and it's making it just a tiny bit hard to understand. HAL, right? Halliburton. So Halliburton is in OIH. It's oil and gas equipment services, right? Okay, I see what you're looking at here. So yeah, I mean, it's had good performance the last couple of days. It's built a really nice base, and looks ready to break out. But I mean, if you're a bargain hunter, I can see why you want to be here. But for me, I want to be, at least right now, I want to be chasing the strength a little bit. I think that if the whole industry, if the whole the energy business is ready for another leg up, HAL is something like HAL is going to give us opportunities to get in when we can be a little more sure. It may cost us a little bit, but I think early on you want to be in the leaders. And Devon is saying it's a leader, right? Does that look like a leader, or does Halliburton look like a leader? So yeah, that's where I want to be for now. But there could be a nice breakout out of this. But if my thesis fails, if energy is actually not ready to go, and I was right the first time, where we have to kind of capitulate, this is definitely going to be one of the first stocks to capitulate. This is going to be worth first stocks to fall a fair bit, right? And it could pull back and fall out the bottom of this consolidation. So that's one of the reasons why I want to start, when I start building positions, rebuilding this energy position, I want to start with the ones that are already strong and that are showing me strength. And I got there by, like you said, drilling down from the very top, and the very top in this case being crude oil, and then down through XLE and all the subsectors and everything, and then looking for the individual companies. And that's an excellent way to find longer term swing trades. Swing trades, are really actually position trades. They're trades that are you own them so long that they're practically investments, right? They're short-term investments. And that method I've just described is an excellent way to find those. Now, once you get in those, I mean, you probably, we're using a whole bunch of technicals to find those things. But once you start dialing in and just trying to pick between the last few companies, that's when you start probably wanting to start doing some fundamental research, and figuring out which really is the strongest of those companies, which is the most financially, viable, who has the least amount of debt, who has the best management, that sort of thing, to really dial into the last couple of those that you want to buy. Cool. Wow, we've really attacked energy a lot today, and for good reason. I think I think there's starting to be a change here in this energy landscape again. I think they might be ready to go. Okay, yeah, no worries, man. No worries. I'm glad we figured out what that was. Yeah, let's go oil. Right on. So yeah, Sarma had actually put in a couple. Sarma's still here. Yeah, good. Sarma put in a couple if possible. Sarma says NVTA. That should be interesting. and POLA. I don't know what POLA is, but let's take a look at NVTA. Right. Oh yeah, I remember this move. I remember back over here. I was watching this stock and here and just expecting this to go. I'm not sure why, but I was just, you know, I never actually bought it, but I was expecting this kind of to put in a bottom and go, and it just never put in the, you know, in the right price action. There was just never a higher high in this. It just kept putting in lower highs and lower lows, and then it just completely went off my radar. And then it jumped back on my radar, obviously, on this big green day. And I can't remember what this was. Oh, earnings. But yeah, that's insane, right? This thing that was just a complete dog, and then it goes up. Doesn't that go up like 300, 400% in a day from that previous day? So from the close of that day to the close of that day, yeah, 260%. Crazy. What a move. Incredible. So yeah, I mean, if you're in this stock, great. You know, obviously traders are in there, you know, jumping into that and all over it. Hopefully, if you went in there to play this, you got out. Whether or not, you know, look at, if you'd owned this, you know, all the way down from here, and then you got this and didn't get out at least part of the position somewhere near the top of this candle, you know, you've got to get out some of it, at least some of it up in there. If you were day trading this and they get caught in it overnight for this big gap down and then this, you know, continued move down, that would have closed that position on day one but missed it. So are you trapped in this now? Did you get trapped with this big gap down? Oh, yeah, that's really unfortunate. Yeah, I don't know what to suggest there. I mean, yeah, when this gap's down like this and just keeps going down, it's the most difficult thing in the world to do. You got to bail out of it because it's just going to keep going down. There are people, you know, who had bought down in here, you know, who had maybe bought early and thought this is going to go higher, and then they're going, okay, well, I'll hang on. We've got the 100-day moving average here. You know, as long as it holds the 100-day moving average, I'll stay in. And then we lose that, right? And they're out. And so, I mean, everybody has like a lot of good reasons to bail out of this thing when they're down in it here. It makes it hard for it to go back up again for a while. Now it broke down, you know, below the 100-day moving average today. It didn't close on the low, at least, so that's good. Because it had been, you know, closing at the low, very near the lows, you know, for the last few days as well. You've got this 20-day, 21-day moving average here. And, you know, we've got what should be fairly decent support zones just below, if you're going to stay in this and hang on. So whatever, you know, I mean, if I were you, what I would do is you need to decide whether you're going to stay in and is this going to go higher? I mean, it went nuts here on this day. Now, a lot of this move on this day would have just been traders falling all over each other, right? Battling with each other, making it go up this high. So the big pullback isn't a big surprise. But there is something going on with this company that got that ball rolling. And so we need to figure out where is fair value on this now. What was the big change here, you know, that caused this move to get going? What does that make this company worth now? And will it start to go back up? Is this something they can build on? And maybe we can make a turn here and start moving our way back up. And really the only way to know that for sure is to dig into this company deeper. If this is just if this is just something where, you know, a bunch of traders got on because, you know, meme stocks have been working and stuff, and traders have been looking for the next thing to jump on and trade, And those stocks, you know, do pull back. And I mean, I can show you one that looks like Saba. Saba is a stock that I can't remember what their news was, but they gapped up yesterday. And what's interesting, if you look at this, let's actually look at a 15-minute chart of this, because today is totally like deja vu. Look at this. I mean, I said to a friend, right in around here after that big red candle, I showed him this picture, and I was like deja vu, and it is perfectly deja vu here. Does it happen a third time? I don't know, but you know, you can see how this, you know, gapped up, they ran it right up, it pulled right back. To me, this is very hopeful that it gapped up the next day, but then they sold it again and it comes down. But it's kind of telling me that this on the second day when it came down, it held in this area here. And this is telling me that whatever caused this gap in the initial run up is a good fundamental change in the company. And it says good things about this company. And that means that's something that maybe if you're an investor, you would want to continue to hold. And maybe that's what's going on with NVTA. So yeah, you got to do some homework, Sarma, and figure out why it jumped up like that, and if it continues to be worth holding. All right, and you also asked for POLA. What have we got here? Heavy electrical equipment. We might have looked at this before. I mean, look at this. It's got a nice little uptrend going. It had the nasty bottom. This bottomed well before the rest of the market bottom. That's interesting. I do remember actually industrials were doing comparatively well back in May. So, all right. So we're obviously, you know, we're in a big downtrend. I think I'm going to draw that downtrend from somewhere around here, something like this. This downtrend isn't super clean. It's kind of a hard one to draw, right? You know, I mean, if you go way up to here, then, you know, we've broken it. But I think this downtrend is probably keener. That might be it there, actually. Yeah, let's get it to there. Good. Okay. Yeah, so this is definitely, you know, breaking the downtrend. It's put in a nice bottoming pattern here. Maybe some people sort of see some sort of inverse head and shoulders in here. There'd be a shoulder here. There's the head, obviously, and we got another shoulder here. Let's actually draw that in. Let's do that. Because this could be interesting if I'm not the only one seeing this. So we got a shoulder, head, we got a shoulder, and that puts the neckline right here at $4. And we're going to call that major support or major, resistance, that neckline. Yeah, that's maybe it's already breaking out of that. Anyway, we'll put this, we'll get that there. This might want to be a bit lower. Yeah, all right. So you can see now we're coming into resistance. But we've got this, you know, we've got this huge bottoming pattern, which bodes well for a move much higher. And how we would measure that is we would go from here up to the neckline, okay? And then we're just going to grab that, just like we sort of measure the bull flags, right? You've seen me do a million times. And we're going to pull that up to here, and that gives us a target of like $9. Juicy. This is a long-term target. It's, you know, it's not going to get there fast or anything. It could take months, even a year to get there. But that does seem, given the, you know, the price action on the chart, that does seem a reasonable target. I don't see anything on this chart that says this won't eventually break through here. This looks reasonably healthy. And in the short term, we've got a decent trend going on, you know, decent uptrend going on, right? I'm just going to watch out for some of this resistance that we've got going on here. So let's get our uptrend. So I think best thing for this is it consolidates in here a little bit longer and then has a nice breakout. But I certainly think this one is going higher. So if you're in it, congratulations. I think there's better things to come. If you're looking to add to it or get in it, wait till a breakout is confirmed here. And that probably gives you a pretty decent place to add or get in. Okay. So hopefully that was helpful. And I think I still have enough voice left to wish everybody a good night. I should probably do that. But I want to move ahead to one more slide here. You're welcome, Sarma. What do we got? So next Thursday, we have a ticker talk. And I think I still need to do a poll and make sure it's cool with everybody if we switch to Wednesdays, and also if or I'm going to ask people about like a favored time. But I think that August 31st, this Wednesday, might be our first Wednesday ticker talk. Yeah, we'll see you guys again next week. And of course, I'll be doing the weekend briefing videos as well. So hopefully everybody has a good night, and we'll see you all again soon. Thanks for coming out, everybody.